protection. Or can you? Pam Zeckman and the Channel 2 investigative team have uncovered some auto insurance companies who illegally delay claims, pressure accident victims into settling for less, and send dangerous cars back onto the road after repairs. It's a practice that could leave you with no protection at all. Highway robbery. Tonight on Channel 2, the 10 o'clock news.
What you see is not always what you get back in prints. At Osco, our technicians use the Kodak Color Watch system to computer correct every shot for color, contrast, exposure, up to 10 critical adjustments. So what you see
Wall Street Week with Louis Rukeyser. Brought to you by public television stations. By CSX, the company that puts things in motion. Transportation, energy, properties, and technology. And by Prudential Bates Securities, the investment firm with rock-solid resources and market-wise thinking in the business of making money. From the Montreal Exchange. Produced Friday, May 27th. Tonight's special guests are George B. Cadell, President and Managing Director, Griffin Investment Counsel Incorporated. Jean-Luc Landry, President, Bolton Tremblay. And Milton K. Wong, President, M.K. Wong & Associates Limited.
Good evening. I'm Louis Rukeyser. This is Wall Street Week. Welcome back. Well, this is the weekend when President Reagan and his entourage go to Moscow. We, being a somewhat lower budget operation, got off in Montreal. The weather is nicer, the food is better, and the conflicts seem a lot more manageable. The big issue for Americans here right now is whether the U.S. is trying to snooker Canada with the new free trade agreement. But despite the urgent concerns over whether we Yanks are going to be beastly to Ontario wine and undersized lobsters from the maritime provinces, these disputes appear downright congenial as compared with nuclear missiles, human rights, and the future of Afghanistan. But it was more than French-Canadian charm that brought us this week to the Montreal Exchange, or Bourse, for a closer look at the Canadian economy. As regular viewers know, we often seek perspective on what's happening north of the border, and indeed this is the fourth time our program has originated from Canada, though it's our first visit to this, the country's second largest and rapidly internationalizing financial market. Canada in general seems to be on the move. Its role in relation to the U.S. economy in recent years has tended to be akin to that of Prince Philip to Queen Elizabeth, headed in the same direction, but generally a few steps behind. Now, though, some think Canada may begin to set more of the pace, with its currency having gained over the last 2 years against the U.S. dollar, and its stock market occasionally showing greater signs of life. We'll be investigating those prospects and what they mean for Americans in the company of 3 leading experts from right across Canada. Interestingly, as in the U.S., a strong economy, with unemployment here at its lowest level in 7 years, has not yet translated into good news for the incumbents in the polls. One published today found the governing Conservatives running well behind the Liberals, who had long been floundering after the departure of the urbane Pierre Trudeau, and barely ahead of the semi-kooky New Democratic Party, whose policies have included nationalizing the banks and pulling Canada out of NATO. Canadians, unlike Americans, don't have to have an election this fall, but the chances are they will, which means that Conservative Prime Minister Brian Mulroney will have to move fast to engineer a comeback, a task considered absolutely feasible, but somewhat handicapped by the widespread perception that Mulrooney has managed to combine the brains of Reagan with the charisma of Bush. Meanwhile, south of the border, down USA way, we couldn't have picked a better time to absent ourselves. There was more action after the lights went out in Boston Garden than in the U.S. financial markets this week. Still caught between better economic news and higher interest rates than it expected, Wall Street threw up its collective hands, confessed in effect to utter bafflement, and took off on an early Memorial Day holiday. If you wanted to find an investor with real conviction this week, you would have had to send out a Mountie. The Dow Jones Industrial Average took the lead by going nowhere slow. On the lightest trading of the year, indeed the smallest average daily volume since last July, the blue chip index simply meandered, ending with a gain of less than 4 points, which was at least its first advance in 4 weeks at 1956.44. Nor was there any more decisiveness in the broader market indexes, or for that matter in the bond and precious metals markets. But by golly, our elves live in a world of their own. Their technical market index leaped 3 notches to a +5 buy signal, its first such reading since early February. Or maybe it was just the Molson Ale. And so it seems appropriate, while the American markets dither, to see if we can find some better sense of direction from our friends and neighbors to the north. Most Americans tend to think of Canada, when they think of it at all, which many Canadians complain is far too seldom, as the huge and benign stretch of territory to our north. Huge it certainly is. The largest country in the Western Hemisphere, stretching nearly 4 million square miles from the frigid North Atlantic to the temperate scenic wonders of British Columbia, across 10 provinces, 2 territories, and 6 time zones. The 2 countries share the longest undefended border in the world, and while one of Canada's 2 official languages is the same as ours, Canadians often wonder if we are listening when they speak on such subjects as acid rain and cultural nationalism. But the natural closeness of the 2 countries is undeniable. We are each other's major trading partners, and trade between the 2 nations last year reached nearly $133 billion. Canada, unlike the U.S., though largely because of us, is a net exporter. Trade already accounts for fully 30% of Canada's gross national product, and the historic free trade agreement signed last October aims at eliminating any remaining barriers to a completely open market between the 2 giant neighbors. Canada's vast acreage is, of course, much more thinly populated. Its 24 million people are little more than 1/10 the U.S. population, but they inhabit a land blessed with remarkable natural resources, forests, mineral deposits, and water power, which, despite impressive modern industrialization, remain the base of its economy. How much do the countries depend on each other? Well, nearly 3/4 of Canada's exports are sold to the U.S., and 2/3 of the country's imports flow in from south of the border. In turn, nearly 1/4 of U.S. exports are bought in Canada, while almost 18% of our imports are made in Canada. Automotive products account for the biggest share of the trade between the 2 countries, followed by mineral and wood products. Canada also ranks as the world's 4th biggest direct investor in the U.S., with about $19 billion in American business ownership. But that's only about 1/3 of the amount of U.S. investment in Canada. The 2 economies usually move in the same direction. Currently, both are enjoying sustained economic growth, lower unemployment, and moderate inflation. Tonight, we are broadcasting from Montreal in Quebec, Canada's oldest and largest province, known as La Belle Province. Quebec has been a French-speaking province since 1534, when Jacques Cartier landed on the Gaspé Peninsula and claimed it for France. Today, Montreal is the 2nd largest French-speaking city in the world, after only Paris. This sense of combining 2 cultures gives the province of Quebec a unique blend of old world charm and new world dynamism. 1/3 of Canada's manufactured goods are produced in Quebec. Paper products are the leading export, followed by a high-tech industry that produces aircraft, satellites, and telecommunications. As in so much of this beautiful country, natural resources are the real foundation of the Quebecois economy. Forests still cover half the province, and a quarter of the world's supply of fresh water can be found in Quebec. À votre santé, Québec. My guests tonight here at the Montreal Exchange have three things in common. They're Canadians, they are world-renowned financial experts, and each heads a firm that manages more than $3 billion, which is not exactly petit chou in Canadian or American currency. Jean-Luc Landry is a native Quebecer based here in Montreal as president of Bolton Tremblay. George Cadell was born in England but emigrated to Canada 32 years ago and now heads the Toronto firm of Griffin Investments. Milton Wong, who leads MK Wong and Associates in Vancouver, is an old friend of this program who is tonight making his third appearance as my guest. Gentlemen, is the free trade agreement going to be ratified, and if so, how important will it be to future Canada-U.S. relations? Jean-Luc?
I think it will. Although you have to note that it will take up to 10 years for the full free trade agreement to be in effect. Major effect, I think immediately, the most immediate effect will be on capital spending in Canada.
Will increase it?
Yeah. Canadian corporations will try to position themselves for a huge market.
You agree, George?
Absolutely, and I think that even more so, any capital outside of the North American continent will now view Canada as just as good a place to build a plant as the United States, so that I think we'll get more than our fair share of capital spending.
Why do you think there's so much local opposition then?
I've come to the conclusion that free trade is a genetic thing. You're either born a free trader or you're not. And those who are not born free traders always fear the bogeyman of competition on the outside. Usually it is people who have the least reason to fear free trade that are the most frightened of it. But I'm afraid it's not susceptible to reason. I'm afraid it's born in one.
Note, from your Western perspective, would you go along?
Oh, certainly. I think the free trade should be looked upon on a global strategy basis, because when you think about the European Common Market, it's 22% of GNP on a global basis. You have the NICs, or nearly industrial countries, they're 22% of GNP. And by combining Canada with the United States, that's 22% of GNP. And strategically, on a long-term basis, it's very, very important that we have that relationship.
Jean-Luc, we're here in Montreal, which, as I said earlier, is emphasizing the internationalization of its market. This is a little different from what I used to hear a few years ago in Quebec when separatism was so strong. Is that issue one that's been laid to rest?
Yes, I think so. We've seen a big change in the overall sentiment in Quebec. After the referendum, I think we can say that generally the business community decided to put aside these problems and just go forward and go for market share. So we've seen Quebec corporations expanding in Ontario, expanding in the U.S., and just going for business, really.
As compared to the rest of Canada, how do you expect the Quebec economy to perform?
I find, but it's only my own perspective, that Quebec corporations are even more dynamic than Ontarians, for example.
Why is that? Because they speak French?
No, it's, I think, the energy that was put into political issues in the 70s has been turned into business. Mm-hmm. And for us, fighting for new markets is nothing different. I think I would disagree a little bit with George in the sense that Quebecers are not afraid of free trade. Ontarians are, because they want to protect their own market. They have a dominant market, especially in the automobile industry, transportation in general, and they've been protected by trade barriers.
George, why can't you be as enlightened as the Quebecers?
I think it's most interesting, but in one particular instance where you get the steel industry, where in fact probably the Canadian steel industry has the most to gain by free trade, and it is interesting. Again, it is I sense it is a union opposition that is genuinely not rational.
What are the main barriers now to Canada-U.S. trade that will begin to fall now?
In terms of barriers, in terms of...
That now exist, that will no longer exist.
Oh, I think I hate to say it, but I think it is definitely Ontario, Mr. Peterson, who is
the provincial
premier, and it is provincial premiers who feel that perhaps their their rights are being usurped by the federal government. So I think that's a
Milt, the first time I was with you was 4 years ago, almost to the day. At that time, the Canadian dollar was worth about 78 U.S. cents. Another guest we had on that night said it would soon be 83 U.S. cents. You said somewhat dourly that it would be 73 cents first. You turned out to be absolutely right. Lately, though, the Canadian dollar has been gaining. It's just under 81 cents U.S. now. What's your forecast these days?
Our forecast these days is that it will probably settle back down to about the 76, 77 cents level in the near future. With the impending free trade and then slowing down the economy, we think that the dollar will begin to soften up.
Well, if free trade is going to be so good for Canada, why will the currency suffer?
Well, I think that's not the direct condition to the dollar. The more important is the slowing down of trade in terms of selling commodities will cause the currency to weaken off.
A weaker dollar means American dollars will go a little farther than they do now. Where should Americans be looking for Canadian investments now?
I feel that the Americans should think ahead as investments in terms of our resource industry. Well, there's a lot of people that think in terms of an end-of-cycle scenario. The fact remains the recent high real interest rates has caused very little additional capacity in the resource industry, so that industries like the pulp industry, newsprint industry, ethylene industries are all very good value.
Any stocks that Americans should be looking at?
I think they should look at companies like Alcan, Shell Canada, Nova, Canfor, which is the lumber, pulp area, Macmillan Bloedel.
I want to hear from these other two gentlemen on this as well, but first let me ask you, do you expect the Canadian dollar to perform in tandem with the U.S., the Canadian market to perform in tandem with the U.S. market, better, worse?
I sense that it should, from this point on, perform better in the sense that there's a lot of values in the Canadian market that have not been realized in the capital market. The sentiments in the market has been so poor that unrelenting improvement in companies have given value to it, but the stock market prices have not moved up.
Jean-Luc, what's your perspective on the investment side?
I think the Canadian market will probably outperform the U.S. market. First, last couple of years, even including this year, real economic growth in Canada is exceeding the U.S. about 1%. Corporate profit growth is higher, inflation is low, and productivity, as Milt has mentioned, has improved quite substantially. We have to remember that, say, in the oil business, in the mining business, those companies have suffered for 5 years, a real depression. So they are very lean right now, very efficient.
I mentioned that there's a possible election this fall. How significant would that be for the outlook you've just given?
I suppose that if the new Democratic Party was to not even get to power, but get the balance of power, you may get some backlash. Although some of the proposals that we've seen from them, I don't think will never come true. For example, nationalizing the banks we've seen the French doing it, and I don't think we'll see it in Canada.
From the wonderful people who bought us the post office. How about Canadian stocks? Which do you think Americans should look at now?
I might add from what Milt just mentioned, Alcan, for example. I like Alcan. And Alcan has a subsidiary in Japan. They are looking for an issue, a convertible debenture issue in Japan. And if you look at the market capitalization of that subsidiary, it's $1 billion US. Now, the total market cap of Alcan is $4 billion US. So it shows how Canadian mining companies are undervalued by international standards, if you want.
George, do you have a list for us?
I would think it's embarrassing that I have to agree with both Milt and Jean-Luc. I think that it's the...
Maybe we should go the other way.
I think the natural resource area is going to do very well, and I think this time around, I agree with Jean-Luc, that it isn't so much an end of cycle. Traditionally, you used to see the Canadian market go on for another 15% after the U.S. market had stopped going up. And it was because of the natural resource consumption at the end of the capital spending boom coming at the end of the cycle. I think that this time very much that we've had the natural resource, particularly the mining industry, has been in a 10-year slump. And I think that there's a sea change, and I again agree that this time around we will not see this sudden, very sharp end to our mining stocks. they're in stronger hands. Their balance sheets have gone from totally miserable to, in many cases, thoroughly strong. If there's an area that perhaps has been left out, there's companies in the communications group, McLean Hunter, for instance, which is just boringly excellent.
That's a nice way to be boring.
Yes.
Any names for those mining companies?
I would go. Well, I would suggest Falconbridge is one. Caminco, I think, very much so. And then turning back again to the forest products, I think you can pretty well pick them with a pin. But I would suggest that Abitibi, having been a laggard, is probably ready now to come to the fore.
One of the fears overhanging the U.S. market is the fear of renewed inflation. If that fear should be justified, might not it in fact benefit some of these natural resource companies you were talking about?
To begin with, it does. Then, of course, as it gets too rabid, it ends up killing everything. But I think in the earlier stages, they are excellent hedges against inflation. This time around, I think they should be even better. But the real watchdog is the world's bond players now are the biggest open market committee. They make the Federal Reserve Board look very slow. I mean, their reactions are in split seconds. And I am hopeful that this time round, the fixed income markets will prevent inflation actually getting in a runaway position.
You, in fact, are more bearish on bonds than your compatriots tonight, I believe. What is your outlook for interest rates?
Well, my outlook is for slightly higher rates, probably in terms of the long end of the market, maybe 1% higher, and the shorter end, pretty well in the hands of the Bank of Canada, but perhaps less so.
Would you prefer Canadian or U.S. bonds at this point?
Very definitely, I would go for Canadian bonds at this point.
Is that based in part on a currency?
It's based partly on the currency, that I do not feel that the Canadian dollar, I would be very upset if it goes much higher, but I feel that it's unlikely to trend down to the levels that Milton suggested.
Milt, what's your view on bonds, given your forecast?
Well, since November lows, there has been quite an extensive retracement in interest rates. And I think we're pretty close to the upper reaches of the interest rates, so that long-term rates are a little over 10%. They may go up 10.25, but a year from now...
You're talking about long-term Canadian bonds.
Right. Long-term bonds will, in a year from now, will be probably closer to 9%. In other words, we expect the economies that have been very strong in the first quarter to begin to peter out and slow down, and so that by
How do you rate Canadian bonds as compared with U.S. bonds?
Well, with the high interest rate spreads between the bonds, we favor Canadian bonds at this point.
What's your stock investment today? What percent?
The percentage we hold in stocks, we're running about 52%.
That's reasonably optimistic, isn't it?
Yes, it's about
Conservative fellow like you.
Right. But the underlying values are very good. The cash flows of these companies are really extremely buoyant.
Jean-Luc, I don't get the sense from any of you three that you think the end of the world occurred last October. What did happen in terms of Canada and the world markets?
Oh, I think generally speaking, we were hit by New York. Canadians followed what happened in New York. And 3 months after, they realized that the economy was still growing in the U.S. and in Canada. Canada was even growing faster, as I said, and realized that consumers are still spending. Capital spending is very strong. So that's it. Business as usual.
Are these markets growing ever more international, or is this something that's been around for a long time?
Well, they are growing a lot more
Is
international.
it because of the communications that George referred to? Or?
But it comes really in waves. In Canada, we certainly saw it last year. I think, generally speaking, managers in Canada were really surprised to see gold stocks, for example, shoot up very, very dramatically, and then fall right back after the crash. So we see some waves of important buying from foreigners once in a while. But the valuation of equities is still international. So when Canadians value a mining stock, they look at the U.S. too and compare the fundamental values.
It's pretty easy for the residents of either country to invest in the other these days, is it not?
Very easy. The markets are virtually integrated.
It's interesting. We often think of Canada as being a little more socialist than the U.S., but in fact, in some areas, you're more capitalist. And one way is in your retirement plans. Would you discuss that for a minute? What does a Canadian taxpayer have as a write-off each year?
A very, very interesting one. In the U.S., your maximum is $2,000, I believe, in IRAs.
And that's only for some people.
It's only for some people. In Canada, you can invest up to almost $10,000 Canadian, which is about 8,000 U.S. In what we call an RSP account, retirement savings account.
And that's a very active market up here, is it not?
Well, it has, I think, for the major reason why the Canadian savings rate is so high.
What is the Canadian savings rate now, do you know?
About 9%, whereas the U.S. is about 4.5%, and you have difficulty staying there.
Milt?
Well, most of the savings that you talk about is going into buying government bonds to finance the government deficits. You know, last October, the Canadians bought probably about $17 billion of Government of Canada savings bonds, and that probably all went to the CSP, into the RSP markets.
Well, with all the pioneering instinct up here, why don't people buy more stocks?
I wish they would.
Maybe tonight you've encouraged them. In any event, talking about this retirement plan may give some ideas, let's hope, to American politicians to boost our savings rate. There, unfortunately, we do have to stop. I want to thank my guests, Jean-Luc Landry, George Cadell, and Milton Wong, and also everybody who has made us feel so welcome here in this beautiful city, especially our gracious hosts at the Montreal Exchange. Next week, we'll be back home, trying to warm things up for the American markets. My guest will be Eric Miller, Chief Investment Officer of Donaldson, Lufkin & Jenrette, and he'll be giving us some highly specific thoughts on how to profit in the next few months. I hope you'll join us. Meanwhile, this has been Wall Street Week. I'm Louis Rukeyser. Good night and au revoir from Montreal.
Wall Street Week with Louis Rukeyser has been brought to you by public television stations. By CSX, the company that puts things in motion. Transportation, energy, properties, and technology. And by Prudential Bates Securities, the investment firm with rock-solid resources and market-wise thinking in the business of making money. For a printed transcript of this program, send $5 to Transcripts. Wall Street Week, Owings Mills, Maryland, 21117. That's $5 to Transcripts. Wall Street Week, Owings Mills, Maryland, 21117. Wall Street Week transcripts are also available to subscribers of the Dow Jones News Retrieval Service. Wall Street Week with Louis Rukeyser is produced by Maryland Public Television, which is solely responsible for its content.
This Chicago presentation of Wall Street Week is made possible in part by Continental Bank, providing specialized credit, investment, and banking services to meet the financial needs of professionals, executives, entrepreneurs, and private investors. Continental Bank.
This summer, a pretty smart Chicago businessman will take advantage of a pretty big tax break called Hire the Future. It matches the talents of some Chicago kids with the summer needs of small business. By hiring these kids, he gets the federal government to pay up to 85% of their wages. Everybody wins. It's an opportunity you can't afford to miss.
Call 580-6789. It's a big break for small business.
Watch the determination and feel the excitement as 6 of the best young musicians in Illinois perform with the Chicago Symphony Orchestra and compete for $20,000 in scholarships. Join host David Ogden Stiers for the 1988 Illinois Young Performers Competition.
Live from Orchestra Hall, Tuesday at 8. Ladies and gentlemen, here's a special announcement. The Illinois Young Performers Competition, incorrectly advertised as being presented tonight on Channel 11, will be broadcast as scheduled next Tuesday, May 31st at 8 p.m. Programming on Channel 11 is underwritten in part by Waste Management.
In the past year alone, we've saved this country what amounts to 500,000 barrels of oil. Enough to fill a string of tank cars 13 miles long. Imagine all this energy saved, all because we've managed to get a gas, just like natural gas, out of garbage. And that's one source of energy we'll never run short of.
This is Channel 11.
Eventually, we'll have to move out of